and welcome to my channel. For those of you new, my name is Dave and I work in financial services, and these videos are a journey and development towards financial freedom. They will cover financial products and they will also cover financial well-being so you, like me, can reach your aims and financial goals sometime in the future. Now let's get into this latest video. This video is about my stocks and shares ISA account review for the month of July 2022. For those of you new, the aim is the portfolio is a 10% return year on year. Annual dividends during 2022 of £1,200 and a year-end valuation of £80,000. It's not a get-rich-quick scheme. Okay, it's just my ideas of my plans and my intentions to grow this ISA account to a substantial value sometime in the future. If you look at the following chart, quite sporadic over the past few months, understandable where it's invested and what's happened in the market during 2022. At the start of the month, we had a value of £61,751, a year-to-date loss of 9.34%. In the month, recovered somewhat, made £3,279, giving us a month-end value, highest point to date of £65,030, a year-to-date loss of 8.86%. Not really happy with the performance, but compared to the markets, much better position because we're solely mostly UK based. During the month, we made contributions of £271.25. And if we look at the following chart, contributions for this tax year to date, £10,783.75, and predominantly based in financial services cyclical stocks. The aim moving forwards, hopefully, we will make full ISA contributions of £20,000 in this tax year before April next year. With regard to fees from our platform provider, averaging out a month, £10.78 during the month. Now the performance has not been great, but it could be a lot worse depending on where we invested. So the portfolio is predominantly UK based. Look at the following chart, 59.88% is in the UK and Europe. 24.68% is in the Americas and 15.45% is in Asia and emerging markets. And we received some good dividends during the month. A total dividends of £90.80 from the following companies. From AJ Bell, a dividend of £12, and from Sainsbury's, the retailer, £78.80, which we reinvested, gave us 35 new shares. And the year-to-date dividend so far, 2022, is £893.39. So well onto our target of £1,200, well above average of £100 a month. And with regard to the shares or dividends, our 9 shares we hold are giving us a yield of 5.05%. Now we're just going to run through the portfolio holdings and some reasons, no story events during the month of July. Okay, so we have 9 shares, 4 in profit, 5 in loss. Makes up 43.14% of our portfolio, of which 38.76% is in the FTSE 100 and 4.37% is in the FTSE 250. Total shareholding values of £28,051. Now, just a quick overview of the 9 shares we hold, looking at the following chart. Our largest holding over the last few months we've built up is Legal & General. 2,878 shares, £7,500, makes up 11.55%. It was bought because it's safe, it's boring, it is very cash rich, but it is currently giving a yield. It was over 8%. Share price has rallied lately, still giving a yield of 7%, and hopefully during the start of August it will give us a very nice result. It will hopefully give us a very nice dividend payable in the 3rd quarter of this year. Our next holding is Lloyds the Bank, 16,097 shares, £7,283, 11% of our portfolio. During the month, interim results were out. Quick summary: profits were up, margins were up, dividends were increased, 0.8p a share, dividend was up 20%. Our next holding is Aviva, the insurance company, 977 shares, £3,868, nearly 6% of our portfolio, but like Legal in General, very cash rich, very good dividends, and hopefully very good results will be given out during the month of August. Our next holding is another bank, Barclays Bank, 1,519 shares, £2,400, 3.7% of our portfolio, and again, very good interim results. Dividend of 2.25 pence for the interim results, and it's done a recent buyback of £500 million, and it will do a more buyback over the next few months. Was announced in results, but again, like Lloyd's, very good profit margins during the quarter. Our next holding is away from the banks. It's Sainsbury's, the retailer. We now own 831 shares as a result of getting 35 shares by the dividends. £1,830, nearly 3% of our portfolio, but everyone needs to eat. Did have very good results recently. Dividends is increased, so hopefully a very good, safe, secure stock moving forwards. Our next share has struggled recently, Card Factory retailer, 2,817 shares, £1,500, 2.3%, but it is very cash rich. It did have a refinance at the end of this year. It cannot pay dividends, but it has got its debt back in track. It is a very cash rich company, and it is still growing, opening new shops, and the profit margins are very good. Our next holding is our current platform provider, AJ Bell or You Invest, 432 shares, £1,354, makes up 2% of our portfolio. Numbers have been very good recently. Assets under management are increased, but for some reason the shares have struggled in its sector. But everyone's investing, everyone's using platforms, so hopefully numbers will continue to grow year on year. But a long-term hold based upon that reason. And they've recently done some branching out into new services offered to newbie investors. Our next holding is back with the banks, but a global bank, HSBC, 236 shares, £1,200, 2% of our portfolio, but again, very good results. Dividends increased, and much to our surprise, they're going to reintroduce quarterly dividends again, which will all be reinvested. And then our final holding is another bank again, NatWest. We will be increasing during the month of August, solely because of results. At the moment, we own 445 shares, £1,100, nearly 2% of our portfolio. They did do a share buyback, £750, which has been completed this year to date, but some excellent results, best results from the banks. A dividend of 3.5 pence, up 7% on last year's results, but they've announced a special dividend of 16.8p a share, so we will be buying extra shares during the month of August before they go ex-dividend, because it has given a yield around about 9%. Not predominantly owned by the banks or the UK government, they now own about 48%, so the shackles are off, they've got a free frame, but a very good cash rich company and a very long term hold. So a quick summary: 9 shares, 4 in profit, 5 in loss, but during the month some excellent results from the banking sectors will give us some great dividends during September, October, later on this year, and it will all be invested into our current holdings. Now, moving on to the funds within our portfolio. If we look at the following chart, predominantly makes up the most of our portfolio. We own 13 funds, 8 in profit, 5 in loss, £36,919. Percentage of the portfolio is 56.77%. Now I'm not going to go through all 13 funds, just a quick overview of the largest. Our largest is now a passive advantage tracker funds. £9,400, 14.5% of our portfolio, but done for diversification, done because it's cheap. It's giving us greater exposure away from the UK investments where our performance or portfolio was until recently predominantly based. Our next holding is a legal and general technology firm, £5,800, nearly 9% of our portfolio, has struggled recently in the tech sector. Who knows, we may actually increase it during the coming weeks and months. It may be seen as a good long-term buying opportunities, but it has recovered during the month of July. We own a global equity fund, £3,600, 5% of our portfolio, done again for diversification, and we own a quite selective ballet gift positive change fund, £3,500, 5% of our portfolio. It was done for green entities, some kind of ESG funds, very selective, owns about 35 funds, but ultimately a very long-term player. Our next holding is a US Smaller Companies Fund, £3,100, has struggled this year, has recovered during the month, but it makes up 4.8% of our portfolio. And then two funds which have struggled this year and the past 12 months. A China fund, £3,000, makes up 4.5% of our portfolio, and an emerging markets fund makes up £1,800, 2.5% of our portfolio. Other funds we own are a second emerging market fund, we own a European fund, we own an AIM or a small caps fund, we own a UK tracker fund, and we own a smallest holding is a Russia fund. We did put £500 in, went up to £600 plus, nice profit. War in Ukraine came, it's now worth £244. A substantial loss, but thankfully it makes up 0.4% of our portfolio. Who knows what will happen moving forwards, but it was done for a specific reason. Started off great, obviously who knows what was going to happen about the Russia conflict. So a quick overview, 13 funds. Some good funds, some funds have struggled, but all the funds are what we call long-term buys. We've got no reason to sell the funds unless market sentiments change or the management's change in that fund. So a quick recap. We have struggled this year, but down 8%. But if you look at the S&P 500, you look at the Nasdaq, they're well in excess of 20% down. So thankfully, because we're solely or predominantly UK based, we've not been that detrimental to our fund, but it is not a get rich quick scheme. We will have good years, we will have bad years, we will reinvest, we will keep topping up, but with the aim to reach our financial targets sometime in future. And remember, if you like the videos, smash the like button, subscribe to this channel, and we'll see you again in the next video.